Good evening to one and all present here. So, in spite of your busy schedule and this last week of year-end process, you will all been busy with that. Thanks for attending this webinar. So, before getting into the webinar, let me give a short introduction about who we are, why we are conducting this webinar. So as a cloud banking, we provide end-to-end lending stack for any financial institutions. It may be the banks or NBFCs or any financial institution, those who are lending, we provide end-to-end lending stack. So what are the solutions that we are offering is the digital onboarding, where we provide a web and mobile solutions for the customer onboarding. And then we have a loan origination system where the entire onboarding of the customer has been automated with complete API integration for different services like KYC, video verifications, credit bureaus, GST, ITR, bank statement analysis. The complete flow has been automated. And then we also have a custom rule engine where you'll be able to make your decisioning faster. So we have a decisioning engine where you can configure your parameters based on your underwriting criteria. So you can pull in the information from different third-party sources like GST, ITR, bank statement analysis, credit bureau. You can give this information as an input to our rule engine, and you can set it up your underwriting parameters, and you'll be able to make a quicker decisions using our custom rule engine. And then we have a loan management system where after loan dispersal, complete loan servicing part taken care, the complete repayment tracking, all the functionalities can be done using our loan management. And then we also have for a co-lending management system where you can manage the co-lending ratios and the repayment schedules according to that. You can also track the repayment and the splitting of EMIs according to your co-lending ratios. And then we also provide a BNPL management solutions. And since we are talking of the compliance today, as per the RBI compliance, you all need to submit the data to the CKYC. So we also provide a CKYC solution as well. So for the data upload, search, and update and all. So we have a complete APIs integrated with the central KYC portal. So you can avail our services for the data upload as well as the search and download as well. And then currently our products support different set of loan products, starting from both secured as well as the unsecured loans. So we support personal loans, business loans, auto loans, loan against property, gold loans, and other different kind of loan products. So we are currently servicing more than 50 plus customers across 9 geographies. So we have been named as in first TCS2 software by G2 software review site, and we have been consistently ranking as a high performer during the last year, and we are also ranking for this year as well. So with this note, let me dive into the today's session. So we have Mani Parthasarathy, co-founder of CloudBankin, as a moderator today, and then I have Mr. Deepak Samuel, co-founder and CEO of AssistFin, as one of the speaker. And then we also have CS Ravi Shankar, who is the co-founder and CFO of AssistFin, as another speaker. Over to you, Mani.
Okay, thank you so much, Shiva. Thanks a lot for the quick introduction about both of us. I think everybody now is we have hardly 10 more days to go to close the year end. And when I today morning I was in an NBFC. I was actually inside an NBFC office. Like they were all busy taking that notes and then moving here and there, right? So the auditors' work has become hectic, and that of course the technology team, they are also pushing towards getting reports and all, right? So there's going to be a highest performance, I would say, where every NBFCs will be stretching their level high, and everybody inside the NBFC is asking about what are the things that we need to do. And one of the NBFC founder were asking what is there are a lot of questions that is happening at the year end. Before whenever an audit comes, what kind of questions that I need to answer, or how can I give the response to the RBI, right? So whatever changes that we can do it, we have 10 more days to do it and then get it done, make it clean. So that is why we want to conduct it just 10 days before the year end. I think we have got some 150 registrations for this particular event because everybody wants to relate this topic, right? So now we have got almost some 70 registrations, 70 participants in this webinar. Thank you so much for joining this. Without any further delay, let me quickly get into this topic. By the way, just the housekeeping update where people, if you have any questions, please feel free to raise it in a Q&A option where we have 10 minutes, last 10 minutes where Ravi and Deepak can explain it. We'll take one by one. So let's get into the first question. So I just asked this question in a panel, right? So whoever makes relevant for you, I mean, you can just take it up the question and then answer it, right? So yeah, I'm just seeing the list of questions with me that we have got it from the audience. So yeah, I mean, now the year end is going to come, right, Ravi? Like, can you tell me what are the key regulatory changes that any NBFC has to do? If you can just tell it in bullet points, that will be helpful for the audience.
Thanks, Manu, for this invitation and just to share my inputs on the year-end compliances. So as you said, what are the key regulatory changes? So if you see in last couple of months, RBI came with the new regulations where they are insisting NBFC to do the compliance more in a frequent manner to get some more transparency. And in line with that, the scale-based regulation has came out, and accordingly RBI has put too many regulations, too many compliances to do to the NBFC. So see, as the year is going to pass on, so first information, basically NBFC wants the information about the financials, and they take all this information through the return called DNBS 02. So earlier that was the information through the XBRL portal, but now recently RBI has discontinued the XBRL portal and they moved on into a new portal called CIMS. Because in the earlier portal there was some glitch and they want to correlate the information more transparent manner, analyze the data more easily. So they have discontinued the system, they come with the new system. Now also, if you see earlier, the returns was on an annual basis. Basically, the financial information which we submit to the RBI, that on an annually basis. But now RBI came with that every NBFC has to do this on a quarterly basis. So they have mentioned that within the end of the quarter, within 21 days of the end of the quarter, we have to inform to the RBI that what is the in a prescribed format. They have given the format DNB 02. So we have to intimate to the RBI provide the information. Also, we have to take care of that. In 2022, RBI came with the directions that certain information we have to disclose in the financial statements related to the loans into their notes of accounts. So that we have to just go through that guidelines. Every NBFC to go to that guidelines and just ensure that what are the additional requirement RBI has asked to disclose into their balance sheet. If you see also, they have made it mandatory for all the NBFC to intimate about who is the nodal officer, who is the principal officer, who is the designated director. Because if you see the continuously complaints are going on against the NBFC by the customers, so they are insisting NBFC just to update the information with the RBI so that if any complaints came to the RBI, they can immediately reach to the particular NBFCs.
Okay, got it. So when you explain, right, in the middle of the word sentences, you are using a word called scale-based regulations, right?
Yes.
Yeah. Can you please give a brief on that, Ravi?
So in 2022, RBI categorized, if you see earlier, the NBFC was categorized as the systematic important or non-systematic important based on the asset size of the company. But in a scale-based regulation, RBI has categorized the NBFC into 4 types. The NBFC base layer, middle layer, upper layer and top layer. So they have categorized base layer NBFC below 1000 crore NBFC. In 1000 crore NBFC, that can be systematic, that can be non-systematic. Above 1000 crore NBFC, the NBFC called middle layer, and out of the middle layer, RBFC will pick out the upper layer and the top layer NBFCs. So they have categorized based on the asset size, and all the returns, all the reporting is based on the NBFC. Let's say the NBFC having a asset size of less than 100 crore. They have to do few compliances. Like they have to do the DNBS 02, they have to file DNBS 13, they have to file through auditor DNBS 10. But as NBFC cross a set of asset size of 100 CR and more, so RBI putting another guidelines, another returns that they have to submit another returns called DNBS 4A and 4B. 4A and 4B basically the RBI just want to understand what is the ALM position of the company. So one return is the quarterly, one return is the monthly. As the NBFC cross 500 CR, the another returns they implement on the NBFC. So based on the size, asset size of the NBFC, they implement the returns and accordingly they have to report to the RBI.
So I think you touched a very good point. I think I'm just switching gears, right? You were saying that so NBFC will be reporting few things, right, to RBI. So can you please list down what are the things that an NBFC has to report to RBI or be it any compliance for that matter?
So if you talk, let's take the NBFC having a asset size of less than 100 CR. So what they have to do, since we are in the fourth quarter of the financial year. So as the financial quarter will end, they have to file the financial information in a return called DNBS 02 to the RBI within 21 days of the closure of the quarter. Then they have to file the DNBS 13 overseas investment within the quarter. As the quarter complete within 21 days, they have to file. Now, simultaneously, they have to start preparing their balance sheet because the deadline is 30th May. So by 30th May, either they have to submit the full year report in a provisional manner or they can get it audited before that period. If they are filing in a provisional file, if they are doing the provisional filing of the full year report, then as they will get it audited, they have to submit the audit report also. And as the audit will done within 21 days, they have to submit the audit report. Also, they have to ask to the auditor to submit the statutory auditor certificate to the company that whether that NBFC is complying the basic conditions of the RBI guidelines, like they are holding the 50/50 test, income asset criteria, they are holding the NOF, net on fund. They are meeting the NOF criteria. So all these things they have to report.
Okay. By the way, so do you have anything to showcase? Do you have any list right now, Ravi, or can you send it out as an email if you don't have right now? Do you have any specific list that you have, Ravi, handy right now?
Yeah, over the mail I can send you the complete list. I will send you share the list based on the asset size of the NBFC up to 1,000 crore.
Perfect. That will help the audience in a much better way, right? Because so in this discussion, the last question itself, you told some 10 different things, right? So it is very hard for an NBFC to remember all these things, right? So maybe if that email, that definitely will help us, the audience, for sure. Okay. I'll move on to the next part. Is there anything specific that an NBFC to disclose to the regulatory, that what are the things that they need to disclose, not to disclose, or what kind of things, Ravi?
So if you see on the disclosure part, see, RBI wants NBFC to disclose what are the asset quality they have. They are more focused on the quality of the assets. If you see the NBFC are saying that they are not bifurcating their assets into the categories. RBI given the category standard, substandard, loss assets, doubtful assets. They are given the category, but NBFC not bifurcating their loan portfolio into that category, because we have to do the provisioning according to the category. If loan is in the NPA category, we have to do the higher provisioning. If loan is going to be the doubtful or bad, then we have to do the higher provisioning. Sometimes we have to do the 100% provisioning. So based on the category of the assets, we have to do the provisioning, right? So that disclosure they have to mandatorily give in the financial statement. Apart from that, the basic since the basically NBFC has a non-deposit taking NBFC. So every NBFC has to submit a copy of board resolution with the RBI that they have to pass the resolution through the board that they have not accepted any sort of deposit in the previous financial year. Also, they will not accept any deposit in the future. So that they have to submit, and more importantly, where NBFC got failed, that they got the audited everything, but they failed to submit the statutory auditor certificate. A statutory auditor certificate is a very important certificate where auditor is giving you the certificate that you are complying with the basic conditions of the RBI guidelines.
Okay. Okay.
This is apart from the filing the returns on the new CMS portal. What the portal has given, you have to submit the report. Apart from that, that information we need to submit to the RBI, showing as a good corporate governance practice, transparency, that the company is transparent in all in everything.
I think maybe Ravi and Deepak are very expert in doing all these things. Maybe you can just get their help also from them. And I'll just move on to the next question. So assume that if I am an NBFC, right? So so I have a bunch of lists to do, right? So what kind of challenges an NBFC face while doing all these things, right? Can you give? I mean, you have been worked with a lot of NBFCs, right? What kind of challenges they face while doing it?
So if you see, it's look very easy, but the challenges which NBFCs generally face, that they first of all they wait for the last day. That since we have to do we have to prepare the financials, we have to check. But when they started, they just started after passing the 3-4 months. Since we have to finalize the annual accounts, first of all we have to look at what are our asset quality. So they have to first look at the asset quality. Accordingly, they have to prioritize that what are the provisions we have to make, whether our NOF criteria, are we meeting the NOF criteria after the year end when we are getting the balance sheet signed by the auditor, are we meeting the NOF criteria or not?
Okay.
Also they face challenges where the classifications of the assets, that they simply take the whole bunch of assets and accordingly do the provisioning. And when the RBI inspection audit came, that time RBI raised the question why you have not bifurcated assets in your category. Also, people missed out. They have taken the RBI compliances very lightly. If you see, many of the NBFC are getting a so-called notice from the RBI that why you have not filed the return since last 4 years.
Okay.
So they are getting there. They are just doing the ROC planning, but not because the RBI is not putting any fine. So they are taking it very much lightly. But the fact is that when RBI comes, they take it very hardly.
Okay. I mean, any recent notice that RBI has given to an NBFC which made them in a very different situation, Ravi, altogether? Any practical scenarios that you have seen? Yeah.
Yeah. So if you see, in the month of February, RBI has cancelled the license of 4 NBFC on a pan-India basis, right? And that one of the NBFC, they cancelled the license because they failed to file the return since 2019. They are sending the so-called notice that you are not filing the return since last 4 years. Why we should not cancel your license? Please explain. And NBFC is not in a position to explain why I am not filing the return. And they are simply saying I am unaware about the requirement. That there is a requirement to file the returns also. They also call the auditors also. Into the RBI office, they say why you have not informed the company, why have not put into the auditor report that NBFC is not filing the returns. So if you just go on a public notice page of the RBI website, you will find the RBI publications that where they have mentioned the name of the NBFC that where they have cancelled the license. So RBI taking the compliance very much seriously. Somewhere NBFC are facing challenges where they are just relying on the auditor, and if they are not not associated with the right auditor who has the good knowledge of the NBFC. So that's the biggest challenge I have seen where NBFC are facing.
Actually, you raised a very important point, Ravi, right? So assume that I've got a notice, right? See, everybody will be panic if somebody got a notice inside their office, right? From an RBI regulator, right? So what are the next steps they need to take right, when we get a notice? I think that is one of the question from the audience also. I just saw it. I don't want to skip that question. That is a very important question. Assume that I got a notice, right? What is the next step that I need to do?
So suppose NBFC got the notice from the RBI. So first they have to understand what is the notice is based on the what? Just because of the non-filing the return, or there is any other questions mentioned in the notice, and the reply will be accordingly. And as the notice came, first of all, we have to just see, RBI will say, RBI will check whether the NBFC is working or not. They have a proper registered office note. So what they do, they send the notice through hard copy. So first you have to acknowledge over the mail that we received this notice, and just immediately get the time. Either they are giving the time, they will give the times of 7 days or 15 days to comply the same. So immediately respond to them and just show that to the RBI that we are complying, and try to comply within the timeline. So basically the notice is the chance. So are we giving a window of, let's say, 15 days or 20 days to file this return? And if your intent is right, and if you start filing, and let's say you are facing some problem, inform to the RBI, come forward. RBI will support. But if you are not doing any business, and if you are just waiting that since RBI has taken the notice, you are taking it very much lightly, so then the repercussions can be accordingly.
Understood. Okay. Got it. So I think let's switch gears to technology. I think Deepak plays a major role here. He has been a veteran in technology for quite some time. So let's hear it from him, Deepak. So how technology? Of course, there is, if any problem comes, right? So everybody say whether we have any technology solution or how technology can help, right? So from the compliance angle, Deepak, what do you think on the technology can help NBFC?
Okay, so when we talk about how this can help, the simple question whenever we start working with any company is like, where is the data? So you beat the any form number which Ravi have quoted, the DNBS 02, or whether you go to the CIMS portal or any notice, even if you get it right. So everything starts with the data. Where is the data? And company take a lot of time while collating the right figures. Some may take a few days. Okay, we are doing the reconciliation with the bank or with the other books. So how technology can help is whenever we come for a compliances, typically the regular one, we need the operations data heavily. Operations data as well as the financial data. And by thank of the technology, like everybody have the data stored in the LMS. So many company, what the best practice we have advised is, let's prepare a similar format into the LMS, what we need to file in to the regularity authority, be it the RBI or be it any other regulator. So in that format, it's a one-time job for a technology guys to make it, and you can drive the data based on that. So not every time you need to do the calculation, just export the data from the system and start filling it. And once the draft is ready, somebody can make the can be a maker, another one can be a checker. Once everything is finalized, this can be filed with the authorities on a timely manner. So if you look at the last year, what had happened, RBI have started sending the lot of notice to the NBFCs where they have missed to file the mandatory forms. And the forms is heavily depending upon the data. We have to work with that. And then like with the partner, we were also struggling. So technology can automate your regular data input to be filled in the form. So this can help, number one. Number two, on the automation front, it is not only the filing perspective, but from the implementation side, be it the CKYC, be it the KYC, or be it the other ratio that you have to manage it. So many times what happened, like post the quarterly closure or the financial year closure, companies suddenly realize, hey, we missed out to maintain some ratio, or we might have done something different to avoid this non-compliance. So on that part, with the technology, we can avoid a lot of delays and we can make easy to comply with the compliances checklist, I would say.
Yeah, I think see, one is Deepak. I mean, in the technology side, right? So, as of course, being an LMS provider, I know like the CIBIL, I mean, month-on-month bureau reporting, CKYC reporting, right? So these things can definitely be automated, and of course, there are lot of data that can be taken from the APIs, right? So,
Right.
apart from that, right? I mean, is there any specific area where technology can bring automation in terms of compliances that you think? So, for example, last time
yes.
when we discussed about uh, um, mm, we were discussing about e-signing, right? So similarly, I mean, what are the areas that a tech can automate this process compliance that will make an NBFC a better life?
Okay, so apart from the regular compliances, as you said, related to the CIC, CKYC, etc., the other part, which is the very, very small one, like your statutory audit register, then then you have to maintain your BR timely in a specific formats. Sometimes people, what happened, they filed within the hard copies, and it is very hard to maintain it, basically find it when it's really required, specifically when something escalated within the organization or by the regulator. This is the one thing. Recently, we come across one thing which is related to your shares transfer and their record. What happens? Sometimes it is like very critical to have this information, although this happen not very frequently. But what happened? Then they start struggling who have transferred the share to whom. Specifically with the smaller organization where a lot of share transfer or the new small investment regularly happens.
Okay.
So one of the basically company who have struggled with this, when they gone for a like the big round, they started doing the basically due diligence by the investor. And then they realized they have a major blunder in the share transfer in between, because they did a lot of transaction with that. So which can be easily handled if we have a small basically compliance technology in place where this can be managed before we execute the exact transaction.
Okay, I mean that really helps. Your answer really helps, Deepak. It's a poll time. So we are going to conduct a poll. I request everybody just take a minute. You can see a poll in front of you. You can just fill it out. I mean, in the chat option also you can see. You click view poll, and then you can see. So basically, we would like to understand how long does it really take to complete the year-end process. It will be less than a week's time, or it's 1 to 2 weeks, or it's more than 4 weeks, right? So that is the first question. And then the second question, I request everybody to fill that. So what percentage of your year-end compliances has been automated, right? It is less than 25%, or it's more than 75% is not been automated, right? And if you're totally not sure, then you can just click whatever you think is right. So I'll just wait for 1 more minute. I request everybody to fill it. This answer helps a lot for us. I mean, I think I can see very few are submitting it. I request everybody to fill it out. Just 2 questions. I don't think it will take much of your time. Perfect. We'll move on to the next topic. So done. Okay. So Ravi, over to you. So what kind of best practices that an NBFC to follow when it comes to year-end compliances, right? So if you can give us a brief, that will help.
So comes on to the best practices. The best practices is to just prepare a checklist. What we have to do based on the entire year, what the business company has done this. Like take examples as during the year company has, or in the last quarter company has opened the branches. So if company is opening the branches, we have to inform to the RBI in a quarterly manner. So just go through the entire year what company did it and prepare the checklist accordingly. That you have to, according to the checklist, you can submit the information to the RBI, to your auditor, and to your board of directors also. Let's take example. I'm just taking the few example. Let's company had done the few transactions of the NCD, or company has taken the commercial paper, or the transactions. So what you have to do, you have to prepare the list when you are filing the returns. What you have to do, you have to put all the information into that return. So prepare a proper checklist, product and process, that what you have to do, how you have to do.
All right,
and accordingly file all the returns without preparing a checklist, just putting everything in the mind that when the times will come, I will able to do it. Definitely we will able to do it, but something we can miss out.
Makes sense. I
So
think
best practice
everybody
is to prepare a proper checklist, thorough checklist.
Correct.
And get it reviewed within their team members or the external to whom they are, the person who is responsible for the compliance. It's advisable just prepare a checklist and do all the compliances according to the checklist.
See, I think when you, I mean, of course, everybody will be using some kind of a checklist. Can you tell me, is there anything, some important thing that people usually miss out from the checklist where people have to get remembered, right? Can you tell me some bullet points on that? Because people, normally they will miss these things, right?
Yes. So whatever I have said earlier, apart from that, as I said you, companies open the branches. But I think few companies report to the RBI that during that quarter, I have opened this much of branches. When they file the returns, annual return, in that return they mention that during the financial year we have opened this much of branches. But it's the compliance requirement that every quarter they have to report to the RBI that this period I have opened the branches. Second, NBFCs open the branches. Some places they close the branches. There is a procedure of the closure of the branches. They can't simply shut down that. They have to inform to the RBI within 30 days. They have to give the newspaper advertisement into that area, into newspaper, that I am closing that branches. Just because, see, RBI wants that information should be with the customer. If any of the customer and company, they have outstanding, they want to make the payment, where they will make the payment.
Got it.
So they have to inform, they have to prepare few policies. Like recently RBI came with the guidelines that on a penal interest, RBI said you can't charge penal interest, you have to, penal charges you can take, you can't take penal interest on the overdue amount. And RBI has given the deadline that every company has to frame a policy that how they are going to charge the penal charges, penalize the customer for the defaults. So few of the policies they have, RBI has mandated. NBFC are not taking it seriously. One more thing, in the scale-based regulations, RBI said that you have to, every NBFC should have a board-approved interest rate policy.
Okay.
But many of them have missed out. And when this all came out, when RBI came for the inspection, RBI looks each and everything. That why you have not done this. So many, generally we are taking the seriously the filing the return, that we have to file the return, done it. One BRB has to pass non-acceptance of property, we have passed it. Apart from the list of the other compliances, we missed it. Also, the too many important things, when there is a change in shareholding, it's a mandatory to intimate to the RBI that what is the change, what was the pre-shareholding and what was the post-shareholding. That can be through the transfer of share, or that can be taking the fresh capital, either in form of equity or in form of any convertible instrument. we are not intimating to the RBI, or we are changing any board of directors, or we are changing address of the company, we are not intimating to the RBI. Even if you see many of the NBFCs, their communication address or communication email ID and mobile number is not yet updated with the RBI. I have seen many of the places where RBI sending a mail to the another email ID, which is almost closed down.
Okay.
So these are the few things which are small things. This is not a big things, but these are the major things which every NBFC need to be adhere, that we have to intimate every material changes to the RBI.
Got it. Got it. I think you nailed it, Ravi. I think we'll have to see these nuances will definitely help the audience, right? I think there are so many questions are coming bombarded in the Q&A section. I think we'll just quickly step into the Q&A. Okay. 1 second. I hope you don't mind, right, Ravi? Q&A. Let's get into the Q&A. No, Deepak, is that okay?
Yeah, no issue.
Perfectly.
Yeah. So one of the questions from Lokesh, where he was asking, could you please share current NPA provisioning norms for an NBFC ND? Right? Can you please share that NPA provisioning details, Ravi?
So if you see the current provisioning of the NBFC ND, now here is the two types of NBFC. NBFC can be investment and credit company, or NBFC can be a microfinance company. In the microfinance company, the NBFC provisioning norms are different. The provisioning norms is 1% of the total outstanding portfolio, or 50% of the overdue amount more than 90 days up to 180 days, and 100% of overdue amount ever 180 days, whichever you have. To the RBI has given the category that how you can calculate the provision, and against you have to do the provisioning. As I earlier said, we have to categorize the loan portfolio into a standard assets, substandard, doubtful, and loss assets, and accordingly we have to do the provisioning. Also, if NBFC is simply giving the personal loan or SME or MSME loan, so a standard asset provisioning is 0.25% to 4.4%. If the loan got NPA, so if loan is NPA between 90 days to above 90 days to 180 days, then is the normal loan, then we have to do the 10% provisioning. Accordingly, the provisioning, this is the substandard criteria. The provisioning will be from 10% to 50%. And if the loan portfolio got doubtful or loss assets, that means if the loan portfolio is about to write off that we are not going to recover, we have to do the 100%. Then in that case, we have to do the 100% provisioning. 100% provisioning can be done at a 180 days if you find that, I'm not going to recover this loan anyhow. So basically simply just do the provisioning 100% or get it right off. See, this is for the basically NBFC. But if you see the NBFC having the asset size of 500 crore more, on which Ind AS is applicable, where the impairment of losses provision is there, where NBFC has to itself, they have to tell that I have to do some higher provisioning on this amount. And just take example, suppose if there is a client who has defaulted for 60 days. So this would be the standard assets. But management know that I am not going to recover from this client.
Okay.
So what will be, definitely you are not going to recover any money from that. So what you want, it is advisable that if you know that you are not getting the money, make it the 100% provisioning against this. Otherwise, what will happen? If the inspection, or let's say auditor can ask to you, see, this is the role of auditor. Auditor can ask to you, there's a customer, you are not going the EMI from last, let's say 7 months or 8 months. They can ask what is the status of this client, and if you are not able to provide, they can recommend you that make a 100% provision against this customer or against this client. So under substandard, you have to understand the nature, and you can always advisable to do a higher provisioning as compared to the lesser provisioning. That suppose if you recover the money, get the repayment, you can take the benefit to the next year.
Cool. I think I think that definitely answered the question. I think still, see, this is the time where you audience, you can just ask your questions in the chat option. I'm just going through it one by one, and if the answers are repeatable, then I'm just skipping out those questions, right? So one of the question is very specific from Ayushi, that could you please clarify how the DNBS 02 of March 2024 will be filed if the time period has been changed from annually to quarterly? This is very specific to that question, I guess, to that NBFC, I guess. Can you please respond, Ravi?
Yes, so if you see RBI make it mandatory that DNBS 02 will be filed on a quarterly basis. So what we have to do, we have to file the fourth quarter return under DNBS 02 within 21 days of the end of the quarter. It's very clear. And then after that, what we have to do, we have to get the year audit, and the another deadline is the 30th May. Before that, if audit is completed, file the audited data report under DNBS 02, or if the audit is not completed, file the full year provisional report by 30th May. And if you are filing the provisional, get it audited as soon as possible on or before. So RBI has given the deadline by 31st December. But definitely you have to follow the Companies Act also, and you have to get it audited before 31st March. We have to file the annual returns also. So just get it complete, and as you completed the audited, file the same return within 21 days to the RBI. Audited one, along with and also ask their auditor to submit the auditor certificate to the company as well as to the RBI within 5 days.
Okay, makes sense. So one of the question is for the capital adequacy ratio, right? CAR calculation people are asking. So do you want to say something on that? Do you have any specific template of an Excel which calculates that?
So as of now, I don't have any template, but if you see the capital education norm requirement calculation is different for the NBFC MFI. So ideally, as standard, you have to maintain the capitalization norm of 15%. If you are maintaining the 15% capitalization norms, we are in a happy. Basically, RBI say that whatever business you are doing against your risk-weighted assets, your capital should be at least 15%.
Okay, got it. I think it's a direct answer given to the A1 loans, anyways. So I'll move on to the next
there is a calculation. There is a totally calculation where tier 1, tier 2 capital, and there is a subordinate debt. If subordinate debt is longer period, initially we will take that as a we take subordinate debt as a tier 2 capital. So we take as a full we take 100%. As the year passed on, there is a reduction in the percentage. So it's the calculation differ from company to company. But the calculation is tier 1 capital, tier 2 capital, and on the basis of that you have to calculate.
Okay, and this is, I think Mahipal is asking how the income recognition to be done for NPA, how the accounting for income recognition and derecognition. That is one of the questions, Ravi.
Yeah, so for the income recognition, so whatever loan portfolio you have outstanding on 31st March, you will book as an income. And as the loan portfolio got NPA, so take example, company has given a loan to Mr. X and they are earning an interest of 100 rupees every month, right? The loan installment is due on 5th of every month. So for the month of March, February EMI due on 5th March, you have taken the interest, booked the interest income on a 5th March, right? Now, we are preparing the balance sheet on 31st March. So there is a period from 6th March to 31st March. So that is the accrued interest, right? This is accrued interest which we have to book into the account. So let's say we have recognized that I am getting this in much interest. So you have booked that interest into the books of account. Suppose on 5th April, the customer got defaulted. On 5th May, customer again got defaulted. And the customer again got defaulted on 5th June. Since the customer got defaulted, so your loan got become NPA. So since the loan become NPA, what you have to do? Whatever the income company has booked against that loan, they have to reverse back.
Okay.
So as the loan got NPA, whatever the income you had booked, that this is going to be received in future. Whatever you have received, that's your income. But you have booked that this income I will recover received in the future. And if you are not receiving till 90 days, you have to reverse back that income. So clearly mention the guidelines. So as
Just
the
to
loan
add
got
that, just to add that what Ravi said, do not basically recognize the income over the NPA portfolio. We have seen the balance sheet where people have booked the accrued interest over the loans which are defaulted greater than even the 365 days. So that's a bad practice altogether.
Okay. I think that is, the next question was also related to that. So as per the RBI, right, the substandard asset, which means that the DPD is more than 150 days, but there is also a clause which says that company more than 90 days also NPA norms. So what does it actually means?
So RBI is very much clear that the NPA is if a loan portfolio got overdue for 90 days. So earlier in the old guidelines, they have giving the relaxations to the different category NBFC, but RBI is coming with the on the same practice where they are following everywhere, including the banks, that if the loan got overdue for 90 days, it's become NPA non-performing, and that rules we have to follow.
Okay. And the next question is, would the loan write-off affect any ongoing legal proceedings initiated by the company against the defaulting borrower?
So write-off provisioning is that if you write off any of the loan portfolio from books of accounts, it doesn't mean you can't process against the defaulter. So recovery is the totally separate things, and writing the loan portfolio from the books of account, because what will happen? Otherwise, you have to do the 100% provisioning. Since you are doing the 100% provisioning, it's advisable that you write off the portfolio, and whenever you get it recovered against that portfolio, that will be your income. So you book as expense. Sometimes why people not write off? Just make the look like the balance sheet is green if the balance sheet going into red because of the bad loan portfolio. So they say I'm not going to write off, I'm not going to provisioning. So it's advisable, make it write off, book the losses this year, and as you will recover, because we can't say whether we will recover the money or not. So as you will recover, you can get income, and the same practice followed by the banks also.
Okay, got it. So as an NBFC, do I need to follow this Basel III norms? Is it a mandate, or is it really required?
So no need to go for the Basel III norms. All the norms, whatever mentioned in the Basel III, RBI has categorized in for the separate guidelines is mentioned. You have to just follow the prudential norms. So in that norms, everything has been mentioned. So no need to get it confused. So if you see that just one regulation, the scale-based regulation recently issued in 2023, we just follow that guidelines, and accordingly we have to do. Because somewhere you will find that some earlier regulation saying something, this regulation is saying something. So we have to just follow the scale-based regulation.
Okay. And question to you, Deepak, it is on the technology side, right? Everybody, some or the other, they are using some kind of a systems in place where the data, right? The concern about the data, where the data sits in the third-party software providers, right? So will there be any challenge, or because if whenever an audit comes, the data sits on the third-party software providers, right? Will that be creating a problem when an RBI audit comes? So what is your view on that?
No, it doesn't create any problem apart from the data localization norm that you need to follow. Otherwise, it is completely fine. But same time, you have to follow the outsourcing guidelines, which is required to be followed by the NBFC. So if you are following that guidelines, even if you have partnered with any technology provider, if data sits there, this is completely fine. But this should not be the out of the basically bottom. This is the one thing. Secondary, it has to be secured. Whenever you do the partner with any technology provider, just assess their capability of securing the data, whether they are fulfilling the basic norm or not. This is the one thing. And if you look at the majority side, the majority of the basically fintech or the NBFC, somewhere or the other, utilize the third-party services, including the LMS, LOS, or the other API. So somehow the data sits anywhere to the partner.
One thing I would like to add, Manu.
Yes, please.
I would like to add one thing. As Deepak said, what NBFC has to do, they have to frame their IT policy. Whatever they are doing, if they are putting the data anywhere, they have to frame their IT policy. This is mandatory. So they have to frame their IT policy, and IT policy will mention that how you are securing your data, where you are placing data. So if you have a policy, you can do according to the policy.
Okay. I think I've got it. So one more question. I'm just it's long questions are coming, so I'm just struggling to read and then consolidate. Okay. So one question that we got is it possible that financial income fall below 50% of the total income? What to do in that case, right? Other income was increased due to reversal of liability that are known will not recalled. So how? I mean, you can just clarify whether it is possible that what we can do in this particular case.
So if you see the basic condition to hold a valid COR, certificate of registration, is that the financial assets would be 50% or more of the total assets, and financial income should be more than 50% of the total income. So these are the two basic conditions which every NBFC has to adhere every year. So somehow, if any of the financial year, RBI, any of the NBFC is not meeting both the conditions, let's say in any of the conditions they got failed, immediately they have to take the immediate action to restore this. So take an example, let's say they have financial assets is less than 50% of its total assets. So what they have to do, they have to increase their financial assets. Let's say generally what NBFCs do, they have let's say NBFC a capital of 2 CR. What they do, they put the money into the fixed deposit or into the property, and they put less amount into the loans and financial assets. So if you see the calculation, the financial debt become less than 50%. So what we have to do, they have to just immediately liquidate that portfolio from banks FD or from property and invest into the financial assets. And accordingly, as they will invest in the financial assets, accordingly the financial income will increase. So it's the mandatory condition to hold the valid COR. If any of the NBFC is not maintaining these conditions and they are violating continuously, RBI can cancel the license.
Okay.
This is the basic. If you see the RBI certificate behind the RBI certificate, they have mentioned. So it's the basic conditions under the RBI Act.
I think when you tell about the conditions, right? The next important question what we have right now is what are the KPIs to be benchmarked, right? Say for example, the important KPIs to be monitored and benchmarked with the market standards, right? If you can throw light on that, Ravi or Deepak.
So if you talk about the KPI on the compliance parameter, the simple KPI is that we have to adhere the timeline of the RBI. That will help when the RBI is coming for the inspection. Everyone know RBI is taking the NBFC on a regular basis and coming for the inspections. And inspector and the team who is coming for the inspection just to punish you. So it depends on you. You can rank itself. You can set the KPI itself that I have to comply each and every guidelines of the RBI. It's respect to the finalization of the balance sheet. It's respect to the giving the loan. When you are giving the loan to the NBFC, any of the client, whether you have followed the KYC norms, whether you have done the proper due diligence of that client, or simply just take the Aadhaar card and PAN card and you just given the loan. whether loan agreement is mentioned, all the terms and conditions. One key important things, RBI implemented the key fact sheet.
KFS.
Yes, KFS. KFS mentioned each and every point, whatever the charges NBFC is taking, or what are the charges a customer has to bear, and just calculate the APR. What is the APR for the customers? They have to attach.
Okay.
So key parameters, they have to be comply the guidelines. Simple, just for everything, for every product, make a process note, make a document that documents I have to collect it. According to that, I have to give the loan. I have to take all the dump data, as Deepak said, use the technology, take the record of all your loan portfolio, and on a periodic basis, not on a year end, on a monthly basis, you check what is the quality of your assets, whether it's a standard or going to be in NPA, and accordingly do the provisionings.
So just to add what Ravi said, actually, like the KPI, it's a 100% achievable or have to be achieved model, where you cannot even do the 99%. Like definitely there are some compliances, even if you miss that, there is not a like the life imprisonment, but same time you have to follow all. So the other thing what we would like to add here is sometime we have to same time when we follow the compliances, same time please ensure that RBI, whenever you enter in basically into the notices what the issues, and when they issue some notice to the big entity or a small entity, and when they enter into the NBFC door, they generally says, okay, somebody have not followed the KYC now, somebody have not followed like the XYZ, but the actual thing, majority of the time RBI enter the NBFC door from the complaint which they received from the client, apart from the major guideline which NBFC need to follow. Let's assume some mishappening happen over the field, or some abuse, or somebody directly taken a case to the RBI, and then when they are continuously receiving a complaint, they directly enter into the gates and they tear apart everything inside, and then they find out what they need to basically justify the reason so that they can take action. So what we say, you have to achieve the 100% KPI each and every regulation. Same time, please ensure you follow the grievance. You have to have a grievance addressal policies. You have a very stringent, same time the fully compliant collection methodology in practicality on the ground. So that will help actually to achieve the hardcore KPI of the compliances.
Okay, I think this answer, right? We've got an interesting question where, say for example, if we got a loan to if you give a loan to a two-wheeler and then finally an hypothecation happened, right? So is it mandatory to comply with the registration with the NESL or CERSAI? Is it mandatory to do that, Ravi? How's that?
So
the vehicle loan
so it's advisable to, for all the secured loans, we have to get it registered with the CERSAI. Okay. NESL totally different if we are giving loan to the corporates, and they are, so because NESL is prepared, established by all the banks to just recover the money, but CERSAI is basically whatever the loans NBFC is giving us secured loans, it's mandatory, it's advisable to don't bifurcate that whether it is a vehicle loan or it is a loan against property or LAP or XYZ. Just make it, if it is secured, just register. Because when the question will come from the regulator, we will not able to justify, not been able to answer. So we need to be more conservative, that if there's a secured, whatever secured, we need to get it registered.
Okay. I think I think we will take just 3 more questions. I've got a question from my WhatsApp. I don't know who's that. Anyways, that is an interesting question. Okay, so assume that I am an NBFC. Monthly I need to report to credit bureau, but unfortunately I missed it for a couple of months. Okay, and then finally on the 3rd month, say for example January, February, I missed. Okay, because of whatever reasons. And so March, like after 2 months, March, shall I submit it together or should I submit it only on March, March data, or cumulatively I should submit, or how should I do that?
So first of all, if they are not submitting the data, this is the violation of the guidelines that RBI has punished many of the NBFC, that why you have not submitted the data with all the CIC. So same thing that if you have missed out, immediately submit the data with the RBI. Sorry, with the CIC. Whatever data you have to submit the data with the CIC. Don't wait for the last day, because if you see now the NBFC which are not submitting the data with the CIC start sending the notices to the NBFC that why you are not submitting the data.
Got it.
Because one of the CIC got penalized by the RBI itself, because on the basis of that, why you have not taken any actions, why have not informed us or send a notice to the NBFC that they are not submitting the data.
So because of the NBFC not reporting to CIC and CIC getting notice from RBI, is it?
Yes, even though the RBI have imposed the penalty to the credit bureau, and to be very specific to that question, if you haven't reported, report it immediately for the leftover period, whatever you have missed it, because as per the guidelines, there is a penalty for 100 rupees per day for the misreporting of the account. So I may say, okay, you have wrongly reported my account, or somebody can comes up, hey, I'm still the NTC while I took the loan. So please report my loan to the bureaus. So even if you have missed that, just report from the to and fro data for these 3 months if you have missed that.
Understood. And I think that is one of the questions where it is raised on the FLDG part. Okay, so maybe we'll touch that as a last question, then we'll wrap it up. So what do you think on the FLDG and co-lending perspective? What kind of compliance? Any specific compliances with respect to co-lending piece? Ravi, Deepak?
Okay, so on the FLDG side, when you are doing the FLDG, and if you are not the NBFC, if you are a plain vanilla fintech company, so you becomes the LSP on that role. So majority time, if you look at, then you have there are very if you are a regulated entity, then definitely you can do the KYC. You can share it with the other partner. Basically, RE to RE KYC can be shared. And on the other part, you have to have your own grievance redressal mechanism. You have to publish the grievance redressal mechanism of your partner into your website. Client should get all the notification type of from the NBFC only. But as the model have matured on the FLDG front, so a lot of thing which has been previously followed by many partner has been stopped. So now FLDG, earlier people were thinking this model will die, but this is not the reality. This model is still, I would say, have been refined post the guideline. And it's a good model to be grown your portfolio, even if you are an NBFC or a non-NBFC.
Perfect. I think so. With that question, I think we can wind up. By the way, audience, if you have any more questions, feel free to reach out to us. We have given our mail ID in the top chat option. Please send it to us. I'll try to connect to Ravi and Deepak to get it answered. Okay, and on offline mode. Just one last thing, Ravi and Deepak, what is this advice that you can give to these entrepreneurs, that is NBFCs, smaller NBFCs or bigger NBFCs? What advice that you give it? Each or one of them. I mean, you can just give your advice to them.
So I will simply suggest the NBFC, since the RBI is very much stringent on the compliance side. So just do some homework, check. Is there any non-compliance? Is there anything missing? If something is missing, complete it before the RBI raise the questions. See, there is no harm that you make the non-compliance, the normal thing. But RBI see your intent. If your intention is correct, let's say you find that you did a non-compliance, that you are not meeting the 50-50 test, your income you are not meeting the income and asset criteria. So RBI will take, okay, let's say you have breached these guidelines. What are the actions you have taken to correct this? So if you just take an example, in a COVID time between 2020 to 2022, many of the NBFC has breached these guidelines. Because the loan was getting NPA, just going to a start. What they did, just they get the money out from the field and put somewhere else. And because of that, they maintain the asset criteria, but they breach the income criteria. So RBI simply, okay, let's see, the 2022 has been passed on. What step you have taken to correct the same in financial year 2023? If you have not meet the conditions in 2023, what steps you have taken in 2024? Same with the filing the return. Let's say you have not filed the return. So many of them say that I didn't get the XBRL login ID password now with the CIS portal. So RBI said, have you reached to us? Or you are just waiting for us that should I come to you and give you the login ID password? So it's better just check that what are the compliances you are not doing. Consult anyone, the good consultant to whom you want to consult. Check with your auditor. First you check with the auditor, that ask them, are we non-complying any of the parameters of the RBI? Check it and get it corrected. Whatever documents you have not submitted, submit to the RBI. If you have changed your shareholding, if you have changed your directors in the past, don't wait for the RBI to send you the so-called notice. If they will find, they will simply say so-called notice, why we should not cancel your license. So they will just start talking with the cancellation of the license. And this is just like a threatening that you are not able to think, how should I reply? Even for the not filing the returns, they can send you. So what we have to do, we have to just get it compliant since the year end going on. So we have to file each and every information. Sometimes people say that if you will file this information, then if you see the industry, there are two perceptions. This is my opinion. That if there is a non-compliance and people say if I am going to intimate to the RBI, so RBI will take in the route and they will punish me. But what I have seen in my 12 years of career, if you come forward and inform RBI that, sir, we did this compliance, but we are correcting it, RBI definitely take action. They will send some warnings, but they will leave you. They will allow you to do. They will check that, okay, you are only doing the non-compliance on this part, or you are doing something others. Are you meeting other guidelines? If you are meeting other guidelines, they will allow you. And there are n number of NBFCs. Those are violating certain guidelines, but they are informing to the RBI that I need some more time. When many of the NBFCs you see pan India, they are not meeting the NOF criteria. They are not meeting the 50-50 test, but still they are working properly. They are taking time, and RBI is giving the time to the NBFC. RBI is seeing that they are putting effort to meet this. So they have given the deadline. They have given the time that you can do it.
Got it. Perfect. I think if you guys need any of the help, please go to AssistFin.com. That is Ravi, Shankar and Deepak are running this company. If you need any suggestions on any guideline specifications, please feel free to reach out to them. And Deepak, one last sentence from your end. What advice that you give to the...
So just the one thing which I want to convey to all the participants, don't take this compliance, I would directly say, as a cost. It saves the entire business model. So sometimes the simple thing is the best thing. Just create the Excel, even if it is required. Do the weekly or a monthly review specifically before ending the quarters. Check if you are missing out something. That is the best way to basically stop yourself to missing out something specifically on the big compliance note. This I would end here, and thank you, Mani, for inviting us here.
Sure. And just one last thing I would like to highlight here, like there is a concept of in CIBIL just recently introduced, that is a TDUF format, TransUnion data format, where See, for example, if there are a lot of loans has been started disbursed through DSAs. So DSA can say, for example, if money needs a loan for 1 lakh, and the DSA can take this 1 lakh from 2 lenders and give to money, where money's disposable income will not be sufficient enough to cater to 2 lakh loans, right? So DSA will apply to 2 lenders parallelly, but none of the lenders know that money has applied loan in both areas, right? To solve that, the CIBIL has introduced a TDF format where the moment when lender A got an inquiry from money, they can submit it in real time on a daily basis. We know that, right? Every weekly one, monthly wise or to bi-weekly wise, NBFC will be submitting the reports to the RBI as the CIC. But in this case, you can just do it on a daily basis where a lender B can able to identify that money has got a loan from lender A, right? So he can be cautious where the DSA's challenges can be sorted out. Where we have provided solutions to do it a real-time update to CIBIL. You can just approach us if you need the compliance, so that every lenders will get benefit out of it, right? So with that being said, I think thank you so much, Ravi, patiently answered to a lot of questions. Deepak, I really appreciate that in a very short notice. I think our earlier speaker was Jayesh, where he got some emergency thing that we are not able to come to this particular webinar. And we have got a very good list of participants. And I think feel free to reach out to Mr. Ravi and Deepak from AssistFin.com. With respect to any of the complaints related requirements on the technology side, feel free to reach out to us also. Thank you so much. Thanks for joining us. Let's meet next time for the new different topic. Thank you so much. Bye.
Thank you so much, Mani. Thanks.
Bye, Ravi. Bye, Deepak.
Bye. Thanks. Bye.